Welcome to the Deep Dive. Today, we're cracking open the latest numbers from Monster Beverage Corporation. This is their third quarter 2025 report, covering everything up to September 30th. Our mission, really, is to figure out what's behind these, frankly, record results they're talking about. We want to look at the whole energy drink market globally, see how healthy that is, and maybe most interesting, get a peek at their innovation plans for 2026. And, just looking at the headlines, net sales up 16.8%, that's $2.2 billion. Big number. But here's what caught my eye, and what we really want to unpack for you, the profit numbers. They grew way faster. Operating income up over 40%, net income also up over 41%. When profits grow that much faster than sales, well, it usually means something significant is shifting in how they operate or what they're selling. Okay, so let's get into this financial scorecard, starting with the main engine, their core business.
Right, the Monster Energy Drink segment itself. That pulled in $2.03 billion in net sales.
Which is up 17.7%, right?
Yeah, but that includes currency swings. If you adjust for foreign exchange, the FX neutral growth, it's still a really strong 16.0%.
Okay, 16% real growth,
Yeah.
and that's driven by volume.
Definitely. They sold, 258.4 million cases.
Yeah.
That's up almost 18%. Huge volume increase.
And all that flows down to the bottom line. Earnings per share up over 41% to 15.3 cents.
Exactly. But the really critical piece here is the margin story.
Yeah.
You mentioned profit outpacing revenue. This is why. Their gross profit margin jumped big time from 53.2% last year to 55.7% this quarter.
Wow, okay. That's a significant improvement. What's driving that jump?
Well, it's a few things working together. One, they've taken pricing actions,
Yeah.
basically charging more. Two, they're getting better with their supply chain, finding efficiencies. And three, this is maybe the biggest factor, a favorable product mix, meaning people are buying more of the lower and zero sugar drinks with the Ultra line. And those, well, they tend to carry higher margins for Monster.
Ah, I see. So the shift to zero sugar isn't just about trends, it's actually boosting their profitability.
Precisely. It's like a turbocharger for their margins.
Okay, so that's the good news on costs, or rather margins. But there must have been some headwinds, right? Things pushing costs up.
Oh, absolutely. It wasn't all smooth sailing. Those margin gains were partially offset. The big persistent one is the cost of aluminum cans. Still high, partly because of tariffs, but also this thing they call the Midwest premium.
Midwest premium. Okay, for you listening, what exactly is that? Is that just a U.S. thing?
Yeah, it's basically a regional surcharge on aluminum here in the U.S. It covers
Easy.
transport, local supply stuff. So even if the global price is okay, this premium can keep their can costs elevated.
Got it. So cans are still a pain point. Anything else?
Yeah, they also mentioned higher promotional allowances, discounts, basically. And also the geographical sales mix had a bit of a negative impact, which probably means some of those fast-growing international markets might have slightly lower initial margins as they try to gain share.
Makes sense. All right, before we move off financials, we should quickly touch on the alcohol brand segment. That didn't do so well.
Right, that's their much smaller segment. Net sales there actually dropped 17%, down to about $33 million. Mainly because sales of the Beast line, their main alcohol product, were down.
Is that a worry?
Well, the way management talks about it, it sounds less like a failure and more like maybe a strategic choice. They might be letting that segment shrink a bit to really double down focus and resources on the core energy drinks, especially that high-margin, zero-sugar stuff.
Okay, interesting angle. Less failure, more strategic pruning.
Right.
So now we understand the company's mechanics. Let's zoom out. Because this isn't just a Monster story. The entire global energy drink category is like booming, a tsunami, you called it.
It really is.
Yeah.
The fundamental belief here is that more and more households globally are buying energy drinks. Penetration is rising. It's driven by, well, the function people want energy, but also lifestyle branding, the huge variety of flavors now. And maybe the biggest thing, value. Compared to, say, a fancy coffee shop drink, energy drinks are still pretty affordable.
That $7 latte comparison really hits home.
Exactly. It's an affordable pick-me-up.
And there was this really striking stat in the report, kind of an aha moment about where these drinkers are coming from.
Yeah, that usage study in Western Europe, really fascinating. It showed that roughly a quarter, 25% of consumers started drinking energy drinks just in the last year.
A quarter. Wow. And where did they come from?
They switched from water, from juice, coffee, even sparkling soft drinks.
So it's not just existing drinkers drinking more, it's actively pulling people from other beverage categories.
Yes, that's market disruption right there. They're changing habits.
And this isn't just happening in one place, it's global. You mentioned international sales hit a record.
Yep. record high. About 43% of their total net sales came from outside the U.S. this quarter.
And the growth rates, FX neutral again, are pretty wild in some places.
Astonishing, really. Asia-Pacific, APAC, was a leader, up around 20% overall.
Any specific country standing out?
Oh, yeah. China, up 42%. India was up an incredible 58.6%. Currency neutral.
58%. Good grief. Those are emerging market explosions.
Absolutely. Huge acceleration.
And what about EMEA? Europe, Middle East, Africa?
Also very strong. Category growth there was around 13.3%. And Monster, importantly, said they outperformed the category in most of those markets.
And they had that big success story there, right, with the Lando Norris drink?
Huge success. The Monster Energy Lando Norris Zero Sugar, they said it was their most successful new product launch ever in EMEA.
Ever. Wow.
Yeah, it's in 27 markets now. And it helped them become the #1 energy drink brand in Greece.
Taking market leadership.
Nice. And they're also playing smart at the other end of the price spectrum. Expanding affordable brands like Predator Fury. That's doing well in Egypt, Nigeria, and especially Kenya, where they say they're the market leader now.
So they're covering both premium innovation and affordable access. Smart. Okay, so the present looks strong, the category's booming. How are they locking in future growth? Let's talk innovation pipeline, marketing.
Well, they're definitely leaning on what works.
Yeah.
The McLaren Formula One sponsorship continues. That's clearly paying off, feeding directly into that Lando Norris product.
Which was limited time in the U.S. initially.
Yeah, an LTO in just a few spots like Texas, Vegas, California in Q3. But the big news is a nationwide U.S. launch is planned for 2026.
Ah, okay. So that success is coming stateside.
Seems like it. And their digital marketing is humming too. The Ultra brand, the Zero Sugar family, had a big digital campaign focused on zero sugar, flavors unleashed. And that worked really well alongside the kind of viral organic success of the main white Ultra Zero on social media. Synergy there.
Right, and we're seeing new stuff hitting shelves even now, late 2025.
Yeah, a few new SKUs rolling out. Ultra Wild Passion, Juice Monster Bad Apple, Monster Electric Blue, and Orange Dream Cycle, keeping the flavors fresh.
But the really big news is the 2026 plan. That looks like a strategic shift.
It does. This is where they seem to be explicitly targeting new groups. The big one is FLRT.
FLRT. Okay, what's that?
It's a completely new brand, Zero Sugar, and it's specifically aimed at female consumers.
Interesting. When's that coming?
Planned for late Q1 2026. 4 initial flavors planned. Things like strawberry flang, guava lava. You get the vibe.
Definitely a different vibe. What else for 2026?
Then Q2 2026, they're launching something called Storm Energy. This is aimed squarely at the wellness energy drink segment. Zero sugar, of course.
Wellness energy, so competing more with those healthy-ish sparkling waters or vitamin drinks.
Exactly, trying to capture those consumers looking for energy but with a healthier halo. Again, zero sugar, hitting that high margin sweet spot.
And for you listening, remember that 55.7% gross margin. Every one of these new zero sugar launches, FLRT, Storm, Lando Norris, is designed to push that number even higher, or at least sustain it.
And they also have a patriotic LTO plan for summer 26 for America's 250th anniversary, an Ultra Red, White, and Blue Raz, and a Juice Monster Strawberry Lemonade.
Okay, lots of new products. But here's a potential friction point. They just announced price increases in the U.S. effective November 1st, either straight price hikes or cutting back on promotions. Management says they expect minimal impact on volume. Now, if volume growth has been so key, isn't raising prices a bit risky? Especially right when they're trying to launch these new untested brands like FLRT. Are they maybe getting a bit too confident?
That's a really fair point. It's definitely a calculated risk. Their confidence seems to come from that value proposition we talked about. Even with a price bump, they believe energy drinks are still way cheaper than alternatives like coffeehouse drinks.
So they think the gap is big enough to absorb the hike without losing many customers.
That seems to be the bet. They believe the market's strong enough, their brand is strong enough to have some pricing power right now.
Okay.
But you're right to flag the risk. And think about the other risk they're taking. Launching 2 entirely new brands, FLRT and Storm, almost back-to-back. Is that smart diversification? Or could it potentially dilute their focus, their marketing spend? That's a big strategic question for 26.
It really raises the stakes. Okay, finally, let's just quickly touch on a couple of other global challenges or nuances, tariffs and taxes.
Right. The tariff impact from aluminum, specifically that Midwest premium on cans, is still there. They said it was modest in Q3, expected to remain a modest headwind into 2026. It's a persistent drag on costs.
And any new regulatory stuff.
Yeah, Latin America. Mexico approved new excise taxes. These will hit both sugary and artificially sweetened drinks starting January 2026.
So that affects their zero sugar stuff too.
Potentially, yes. Mexico's not a huge part of their sales yet, maybe low single digits. But it's a sign, right?
Yeah.
Regulatory pressure on these categories could grow elsewhere too. Something to watch.
And one last interesting point, Argentina. The numbers looked bad, sales down 15%, FX neutral, but there was a story there.
Yeah, this is super important for understanding how to read the numbers sometimes. That sales drop, it was intentional.
Intentional how?
They changed their operating model there earlier in the year, basically to reduce their exposure to the volatile Argentinian currency. So the reported revenue went down as a result of that change. But, and this is key management clarified, that the actual volume of cans sold in Argentina went up.
So they sold more product but recorded less revenue because of a financial strategy decision.
Exactly. They prioritized stable financial management in a tricky market over maximizing the headline revenue number for that quarter. Shows a focus on long-term health.
Okay, so let's try and wrap this up. Monster's Q3. It's a story of, well, accelerating financial performance. Record results driven by strong pricing, better efficiency, and crucially, that big consumer shift towards higher margin zero-sugar drinks.
And they're using that strength to fuel really impressive international growth, especially in Asia and EMEA. They're executing well overseas.
And looking ahead, they're not sitting still. They're proactively going after new customer groups, new needs, with brands like FLRT and Storm Energy, trying to shape the future of the category.
Definitely playing offense. It's all about securing that high-margin future, seems like.
It really is an impressive balancing act, protecting their core hits like Monster Green and Ultra White, while also making these big bets on innovation like Lando Norris and now FLRT and Storm. And maybe that leads us to the final thought we want to leave you with today. Looking ahead to 2026, Monster's growth clearly comes from both loyal fans of the established drinks and these exciting, potentially massive new product launches. So the question is, which force will be more important for driving their margins next year? Will it be the steady loyalty to the core, or will it be the success or failure of these big swings into totally new segments like female-focused FLRT and wellness-focused Storm?
That tension, that balance, that's really going to define their story moving forward.
Something for you to think about. Thanks for diving deep with us.